Welcome to the Trader Career Track of PJFIS 2021. The future starts now. If you want to post about PJFIS 2021, the future starts now, do not forget to use hashtag PJFIS 2021, hashtag the future starts now, hashtag CFA Society Philippines, whether you're posting in Facebook, Instagram, or LinkedIn. As a reminder, the evaluation form is available in the CFA Society Philippines mobile application. We have an evaluation form for each day of the PJFIS 2021. This is part of the requirement for you to get the e-certificate. And you should attend at least 70% of the whole summit or at least 13 sessions to get the e-certificate. We're sure many of you are excited to know what a career in trading is like. For this afternoon's first breakout session, we will be having a panel discussion from seasoned traders from the finance and investment industry to answer frequently asked questions about their role. Our first panelist has been in the asset management industry for 9 years and currently manages Atram's public multi-asset funds and several of the firm's wealth and institutional mandates. Prior to this, he has had extensive experience in Philippine equity markets as a portfolio manager, analyst, and dealer. He is a CFA Charterholder, a CAIA Charterholder, a Life Management Institute Associate, and BAP Treasury certification recipient. Before joining Atram, he worked as a money market manager at an insurance company. Let's give a virtual round of applause for Mr. Ivan Ante, CFA. The next member of our panel is the head of investments at CTS Global Equities Incorporated. He has been trading global markets for more than 10 years, ranging from the Philippines to the US, China, and Japan. He also currently serves as a board member and mentor at the Kalum Trading Institute. Moreover, he is a CFA charter holder. Let's give a virtual round of applause for Mr. Leonard Chua, CFA. Rounding out our panel is the Assistant Vice President and OIC Head of the Trading Desk at CTBC Bank Philippines. He trades FX, derivatives, and peso and dollar bonds. He has more than 10 years experience in trading. Prior to CTBC, he dealt in the local equity market while at First Metro Securities Brokerage Corporation. He graduated from the Ateneo de Manila University in 2004 with a degree in BS Management. He later obtained his CFA charter in 2018. Let's give a virtual round of applause for Mr. Martin Santos, CFA. Our moderator for this session is a fixed income portfolio manager of Manulife Investment Management and Trust Corporation. She is responsible for the management of peso-denominated fixed income portfolios and general accounts of Manulife Philippines. Prior to joining Manulife, she was head of the dollar-denominated fixed income desk in the Treasury banking group of United Coconut Planters Bank. She has over 10 years of work experience in the banking industry. She previously held sales and research positions in the Treasury groups of Rizal Commercial Banking Corporation and the Bangko Sentral ng Pilipinas. She graduated with merit from the University of Bristol with a degree of Master of Science in Economics and Finance. She is a CFA charter holder and holds a Bachelor of Science degree, cum laude, major in economics from De La Salle University. She also finished top of her batch in the one-year course on Trust Operations and Investment Management conducted by the Trust Institute Foundation of the Philippines. Let's give a virtual round of applause for Ms. Starlyn See, CFA. I now hand the floor over to Star for a panel discussion.
Hi, so good afternoon, everyone. I'm sure a lot of you are thinking, is trading the right career for me? Or is it too late to shift now? Well, let me discuss it from my own perspective first. Like when I graduated from college, I honestly have no idea what trading is and just vaguely what equities or fixed income assets are. My first job was compliance, in which I monitor personal trading activities of investment professionals. And that's what sparked my interest in investments and trading. So I guess for me, even if we do not have a financial background, it isn't too late to choose this career path. It is not too late to shift. Now let's listen to what our panelists have to say. So Ivan, how did you become interested in trading? Can you tell us more about your responsibilities?
Thanks, Star. Good afternoon, everyone. For my evolution, it's really, as I mentioned already, it's an evolution. I never thought that I'd be doing this this specific career. I started actually reading a book like Rich Dad Poor Dad when I was grade school. Since my parents did not have a business background, I want to study more of the investment. So you invest with those who already have businesses. So I was more interested in equities or stock market. But as I went through my career, there has been a lot of opportunities that I got to learn more about money market, fixed income securities, and then equities, different roles within those asset classes like analyst and dealer, and then trader, and then eventually portfolio manager. And then that actually now, I think it was not planned, but at this point, I think I was prepared for this multi-asset role because now we combine those different asset classes and the skills that I have learned at least and continue to learn for me to do my job properly. In terms of my background, I was an economics graduate. In Ateneo, actually, we did not have a lot of trading courses. It's more about finance, right? But not trading, not really that much about investing. But the main motivation is really how to create wealth for your family and for yourself, and how it can help me understand myself better. And I guess we can discuss more of that in a bit.
That's very interesting. Like I'm sure a lot of us here goes through like evolutions in our career, and eventually we kind of find out also through that evolution what we love to do best.
Yeah.
Like, what strengths or skills do you have that made you a successful trader?
So actually, I think first and foremost to be at least the minimum for a trader or an investment professional is that you have to have discipline. And next one is that you have to understand or you have to love what you want or what you're doing, because it can be very, what's the usual word now? Stressful. Yeah, when you're in this kind of industry and you don't like what you're doing. So first is you have to be interested. You have to have that personal internal scorecard that you want to be better. Because if you're just looking for external motivation, then it's not going to be enough. So first foremost is you have to be curious. You have to have your own motivation. But at the same time, I think the minimum really is that you have to be able to understand that making mistakes is okay in this kind of environment, because this is not usually what's taught in school, right? Making mistakes in trading is just par for the course because you can't be 100% right. So as fast as you can understand that one goal or one lesson, that you don't have to be right. You don't even have to be 60 or 50% right. Sometimes depends on your risk reward. But I think that framework of mind is the first one, and then we can go about technical skills later, which I guess our other panelists are more they're more technical experts in that than me.
I couldn't agree more, Ivan. I mean, like I think every single day we learn something new, and it's important that we are not afraid to make mistakes. Because that's really how we kind of remember the biggest lessons we are. It's like whenever we make a mistake, then that really sticks in our mind that, okay, this is
Definitely.
something we have to do better next time. So now
Mhm.
let's listen to what Leonard has to share about his motivations. So Leonard, when you when you decide to choose your current career path, what motivated you to choose this? And can you tell us also more about your responsibilities?
Hello, everyone. When I started to look at the stock market, it was already in my fourth year. I've always been interested in finance. I'm a graduate from the Ateneo de Manila, but there was never much courses about stocks market specifically. And then I applied for COL financial analyst position, and I was an analyst for 2 years. I really enjoyed what I did, but I found out that the company had a sister company, which is a prop trading division, which traded stocks all over the world. And that's when I shifted my job from an analyst to a trader. Same with Ivan. There was a lot of evolution. Did a lot of day trading to start. When you're younger, you're able to have more energy to do it. And over time, shifted more strategies towards towards longer term trading. Yeah, that's about where how I started.
How about in terms of, I guess, the strengths and skills? I mean, is there anything that you think that made you that, I mean, I guess I'm sure you have a lot of strengths or skills that help you in your career, but if there's one skill or strength that you want to highlight, what is that made you successful?
Hirap naman one, but uh, 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 I guess the main one, it's related to Ivan's dealing with stress. It's the ability to take risks in the face of uncertainty. So in the markets, you're never sure. You have some idea of where your edge is, and you need to keep trying. And hopefully, the edge will show itself over time. So being able to take risks and not be stressed about it, that's important.
I completely agree with that. I mean, sure, if everyone can have like a crystal ball to kind of predict what the next day holds, right? I mean, it would be the easiest. But of course, every single day we are faced with a lot of uncertainties. And now you see how crazy the swings in the markets are due to the pandemic. So this career is definitely not for someone with the faint of heart. So it's something a very challenging career, but also very fulfilling. Would you agree on that?
Yeah, definitely. The highs and
Definitely.
lows are part of the journey, and you need to enjoy them both. So yeah.
Yeah. How about you, Martin? So can we learn more about what motivated you in this career path? And can you tell us also more about your responsibilities?
Yeah, actually, I was always inclined towards numbers. I wasn't much of a speaker or writer, so I guess that left me with numbers by default. It's something that interested me even as far back as high school, and then college. It was something that appealed to me. So when I graduated, I had this impression that maybe I wanted to pursue a career in the financial markets. In 2008, I actually joined the First Metro Securities, where I traded local equities. At the start, I was a stockbroker, but about a year or two into it, my boss asked me if proprietary trading was something that interested me. So it's something that I said I wanted to try, and I guess trading is something like that. It's something that you need to try to determine if it's something that you'd like. It's not something that you can read all the books that you want, but unless you start trading, you're not. I don't think you're gonna know that it's something that you want to do. As the other panelists have mentioned, it's very stressful. So I guess one wanting to be that stressed is not something that you grow up wanting to do. Um, that's why if anyone wants to get into trading, I think the best way to do it is to just trade. uh, like open an account, local stock market, PSE, open an account, and then just try it for yourself, and then just to get a better feel of of trading, and if it's something that you want to do for the next several years. As far as my responsibilities are, I'm tasked to manage the team and to hit the group targets that are set at the start of the year. Our main responsibility is to generate trading income, trading peso bonds, dollar bonds, and FX and derivatives. We're also responsible for providing prices for treasury marketing. They're the ones who face the clients, but with the client requirements, they would need certain pricing for products, and we provide that. Yeah, I think that's it.
Thanks for sharing those insights, Martin. Is there any what I asked from Ivan and Leonard, is there any particular skill that you think that help you become successful a successful trader as you are right now?
I think the most important thing, as actually they've mentioned earlier, is to be able to manage the highs and the lows. Don't get too low and don't get too high as well. I think at the start you can't help it, especially well, in my experience at the start I couldn't help it, and it's very tiring. I mean, of course, during the days that you make money, you're very happy, and then you're very down on the days that you don't. So I think as the years go by, you kind of learn to manage those emotions, I guess. And another thing I guess it's important is to be decisive. I think whenever you're trading, you just have to believe that whatever it is that you think is going to happen will happen, whether or not you're wrong. You just have to be disciplined, and in I guess disciplined in the sense that if you feel like your position is wrong, you need to get out of it already. I think that's the most important thing as well.
Yeah, I really agree with that. Like, I mean, emotions is actually probably one of the, if not the most, the biggest challenge that you'd have to deal with as a trader. I mean, our panelists are guys here, so probably less emotional than I had been. So I even had instances in which I actually cried over my positions at some point in my career on the earlier years, until I realized it's really part of life and I can't just keep on crying every time I make huge losses. So that's really how it is. And eventually you have to be really objective when you make a position, right? You can't always be swayed by emotions.
Yeah, it's easy to say that discipline is important, but when you're very emotional, it's kind of hard to stick to it. when it's right there and then you're taking loss, it's hard to be disciplined. But I guess it's something that you learn through the years.
Yeah, that's really true. So, I mean, our panelists have discussed that. I mean, one thing in common is also that given the high stress of the job, it's very important that you really love what you're doing. So Ivan, can you share to us here what you really love about your job, and how it drove you to, I guess, weather through all those challenges, the stress, and I'd say, like, be really excited about every single day.
I think one of those questions when you talk with your friends sometimes is, or I guess some interview questions are, it comes like one example is, what would you do for free, right? And that one for me is trading. I think if I'm retired, I'm still gonna be in the beach somewhere, still have my Bloomberg or any other terminal trading. Also, that not only for the money, and obviously that's a big motivation for everyone, but I think it's a challenge. It's like for me, trading or investing is a game, so it gives me that satisfaction. It's not about it's not about, for me, by now, it's not about making money. It's making the right decisions and sticking to your plan. Because for a bit of context, I am more of when I started, I didn't have plans when I traded, right? So I heard some rumors. I heard from my tito, oh, this stock is good, so I'm gonna buy. I didn't have any plans, so one of my first trade, I lost 20% from all my from all my Christmas allowances, etc. My first trade, I lost 20%. I didn't even know what happened. But I was in school back then, and then I was checking the chart, and it kept on falling. Every fall is like 4%. So I guess it's like a penny stock already, right? Every fall 4%. So you're like, oh no, that's my like 1 month allowance already gone. So anyway, so having said so that's why I think it's fun now for me because I learned how to manage that impulse. Like having no plan, sticking to your plan, and what Martin said, and what Leonard said is even if you're uncertain, take the bet. You don't know what's gonna happen. As long as that decision was part of the plan, is that your method, right? Stick to your plan, and if you're wrong, have have a plan also when you're wrong. When you're right, you're right. When you're wrong, have a plan. Cut loss and get out, and then forget about it, and then move to the next trade. I think one of the things that I enjoy most is that as long as you don't zero out your capital, you always have the next day to play. And I think that's when you're starting, make sure that you're going to be always there for the next day, so that you can either refine your strategy or still enjoy or still make money or make bawi. Because if you're zero, then it's very hard to go unless you have a lot of unlimited capital. So I think that's the best thing about what I do is I love it. I learned more how to handle my impulses through trading and investing. And it makes money, right? So that can take care of my family and my clients also.
Yeah, that's
Mhm.
very interesting. Also, I mean, even the story you painted, that you enjoy going to the beach while trading. That's kind of like something you see in the movies, right? So
Yeah, that's my dream. Like having a dog while having a six pack while I'm 60, and then trading for like 1 hour a day and just making money just to just to I guess retire properly, right? I think for me, retire is just you just have that freedom, whatever you want to do. And I think trading can, if you're good and if you have that's your preference, that can definitely help you in that direction.
continue doing something, even when you're retired already. That only shows how much you really love your job. So
Hopefully they
now
still
we,
pay me. Hopefully my boss is not there.
or you have your own, or own firm then, right?
Yeah, that's true. That's true.
So I mean, even when we do things we love, so now we move to Leonard. Even when we do things that we love, there will always be the unexpected. So Leonard, did you have any assumption about your role that turned out to be quite different from reality?
Definitely, there's a lot. I guess the first one, like as for everyone, like you watch movies, right? Like Wolf of Wall Street or Wall Street, like it's very idealized in the media, and there's a lot of grind and hard work involved. I probably did not expect to start when I got in, and the journey to learning, even to master it, continues and took longer than I thought. It's like there will be times when the markets are good, you think you've got it, and then you're gonna experience tough environments again, and it's a journey that definitely lasted longer than I would have thought when I started. Number two, I guess, since especially when you come from school and you took the CFA exams. So same with Martin, I like numbers. So we look at fundamentals. Initially I would have thought like once you get the numbers right, you figure out the market, but then you realize there's an aspect of the behavior, the human behavior, and that's always been harder to predict. So human behaviors can overshoot on the way up when there's greed and also collapse, like last year during the COVID pandemic, you'd see it could collapse when there's fear. And that's something I had to learn over time, that like I know my numbers, but there's also a behavior aspect that I had to learn. And it was something I did not know when I started.
Yes, definitely sentiment play a big role when it comes to how prices move. And whenever are in a crisis, that's the perfect example of how sentiments can drive the valuation very far away from what it should be. So, but is there any memorable challenge that you encountered at work? I mean, given that as you said, things don't always happen the way you expect them to happen.
I guess same with Ivan. Like when I started, syempre, like on my personal account, it feels small, and we'd do all in, we'd do margin, the usual risky stuff we did. And I remember there was a week, 2011, I think there was a crash in the US, and then my account was just down 20% in 3 days. And that was shocking. And obviously it was wrong in many aspects of like risk management and whatnot, but those were lessons I had to learn, especially when I started.
It's actually very funny when you and Ivan are sharing about that, because like I actually had a similar experience when like this happened more of like my personal trading, right? Because usually when it's your personal account, you don't have the discipline. But if it's of course, if you're managing the money of investors, and you follow rules, right? Very strict limits. But when it comes to your personal, then you're more carefree, which is wrong. You should actually implement the same type of discipline. And believe it or not, like the stuff, there's one stuff that I've held on to that fell more than 20%, and I'm still holding on it now. It's a very small position, but I just kind of forget about it, that I even hold that stock. So, but then I completely agree that discipline is always the most important when it comes to trading, managing your positions, because that's really how you really get hurt and how you get in trouble if you don't have that discipline.
Confessional pala to. Sorry.
Yes. So now we move to Martin. So how do you come up with your strategies prior to trading? I mean, do you focus on qualitative or quantitative analysis?
Actually, as Leonard mentioned earlier, the numbers part, of course, you look at it. That I think that's the when you use a fundamental analysis, and actually when you take your CFA program, you're gonna learn a lot of it. Looking at economic data and then economic trends, and you do all those things. But at the same time, I also use technical analysis. I think that captures the market psychology better. You look at the historical price action, and then you look for patterns that present certain opportunities in the markets. You kind of combine both of those things to kind of come up with your own trading strategy. And then that it also tells you when to get in, when to take profits, when to cut losses. I think, of course, more than anything, those are the most important things that you have to determine at the start. You need to have an entry strategy and an exit strategy every time. So whether you're trading for your personal account or trading for a bank or an asset management firm, you really have to have these things in mind every time you enter trade.
Earlier, we were actually talking about emotions, right? I mean, during the times that your strategy doesn't pan out, how do you cope? How do you cope with it? How do you cope with the emotional struggles with it? How do you cope with your positions? Can you, walk us through it?
I don't. Honestly, it's a I think probably this is where the personalities come in. It's hard at the start, especially. I remember when I first started, and then as with anything, there are cold streaks, there are hot streaks, and sometimes when you hit the rough patch, I remember at the start when it happened, when it was happening, I guess more often. Um, Parang there I remember kasi I was only a few months into it. Parang nasusuka ka pa dahil nangyayari siya. So parang it's not something that I guess it's something that you learn to deal with the longer you do it. So I think for me, it really helped that my bosses were very supportive. Actually, sila you see them na parang sige, talo, and then you still see them cracking jokes kahit talo. Na parang I think that's also their way of coping with the stress. And I think that's something that I also picked up, that you kind of have to make, you're not making light of the situation, but it's more like you're just managing the stress.
Yeah, it's very, very important to manage it. And I guess like as we mature in our career, then you learn better ways on how to cope with the ups and downs. In terms of certifications or training, I guess what training or certifications have you taken that you think is very helpful in terms of coming up with the strategies when you prior to trading? And I guess like any experiences also that you've had that really help you grow in our chosen field.
Actually, as they mentioned earlier, there's not a lot of things about financial markets that are taught in school. I also came from Ateneo. There's not, I guess, unless you take a finance track, which I didn't, you will have to do a lot of studying on your own. That's also the reason why I enrolled for the CFA program. I looked over the curriculum and it seemed like it would cover the things that I wanted to learn. So that's the first thing I did. And then on top of that, I also read some trading books, which kind of taught me more about technical analysis and then the market psychology part of trading. So it's really a lot of studying if you want to get into it. And as I mentioned, it's not something that you encounter on a daily basis. I mean, trading is not really that common, I guess. It has to be something that you want to do. It's something that you want to try. So it takes a lot of effort, I guess, in developing these things, and it entails more reading than I thought it would, to be honest. Yeah.
Any particular experience in your career that helped you grow?
I think the losses teach you more than the wins, to be honest. So you remember really the biggest losses.
That's true.
You tend to forget the biggest wins, but you tend to remember the biggest losses. I think that's as Ivan mentioned, it's par for the course. It's not something that everyone has to go through it, and you kind of learn how to avoid it the longer you're in it. But there's still no guarantee, to be honest. Yeah, I think it's probably the just to gain experience is probably the most important thing, I guess. What I'm saying.
Right. Thank you for sharing those insights, Martin. How about you, Leonard? I mean, any certifications or trainings that you think would be quite beneficial for our chosen career path, and also any, I guess in terms of experience, what if you can name one experience that really helped you grow?
I guess same with Martin. Like most, once you go to trading itself, you try to educate yourself, but it's very self-education. Yeah, you have to do the hard work and talk to my office mates. That was the lucky part, I guess, of having a team, that you get to learn from the experience of others. In regards to what was very helpful for me was teaching. So I'm an instructor, part of KLUM, and by teaching, you try to realize what things you don't really fully understand versus things that you do. And that was very foundational for me to get to the next level.
Right. Thank you for that, Leonard. I guess like before we end our panel discussion, let's hear from our panelists. Like, I guess one is the greatest achievement you've had, and two, any advice you have for our young minds. So let's start with Ivan.
for the greatest achievement, I think it's kind of related to what Martin said when he said that you remember your biggest losses and you tend. I don't forget my biggest winners, probably the in-between winners, but sometimes you tend to remember also that. But it's related to how I managed the portfolio last year, I guess, our clients' portfolio, and so I guess a bit of context was that COVID, right? What happened last year took everyone by surprise. Since I'm a multi-asset investor, I look at other markets also, like Leonard and Martin. So in this, particularly in early part of or the middle of January, I keep on seeing already news about China and the COVID situation there. But then after like 1 or 2 days, the news stopped, right? It stopped. They were able to cut off any media. So what I did is like look at Reddit or other sites that give you more information that's not yet controlled by the government. So what I saw there was pretty scary. Everyone's falling off, just standing by the roadside, etc. So now, why is that important to this question, right? So it was very hard to be bearish then because nobody understood what it was. You can hear about everyone saying it's just a flu, even doctors saying it's just a flu, which obviously when you're an investment professional, you can't self-diagnose, right? Or you tend to listen to the doctors. But because there's a lot of uncertainty, you have to just trust someone. But as you know, time went on and this keeps on happening in China. What I did is to be defensive. So I reduced the risk in the portfolio by reducing or selling stocks, by increasing bonds, and by increasing cash, right? So I think that's one of the biggest achievement because it was not yet part of the herd. I was not yet part of herd. I took a contrarian approach both in the Philippine setting and global setting, and I took some drawdown. For example, like I was underperforming for a while because it just kept going up, even though people are seeing that, oh, COVID is bad, but the market didn't care, right? It kept on going up before it finally went down around latter part of Feb in the US, but in the Philippines, it started latter part of January. So I think when you're trading, and especially when you're starting, it's very easy to listen to, I guess, everyone, because it's just so, the information out there is so it's a lot. And now parang when you have a lot more information, you have analysis paralysis, you don't know what to do. So you just tend to listen to whoever that sounds smart, right? So I think it's better for investors or new investors to realize that trading or investing is a competition. It's a competition between others, but most especially between yourself and how you feel. Usually you just go with the trend because it's more comfortable. So you have to fight against that also. So I think when I was able to do that, to be contrarian in a big way, and as a result, it was a correct decision. And as a result, there was a good outcome also, wherein I saved my clients' my clients' money a lot. We were able to be positioned better for the rally next few months. So I think to your next point was, just be prepared. I have this Charlie Munger 4 characteristics that I guess kind of like easily captures it. It's preparation, you need to prepare. Discipline, you have to be disciplined whatever you prepare. You have to be patient because the market is open all the time. And then you have to be decisive when the time is right. So those are my the lessons that I can impart also to you guys.
Thank you so much for those really wonderful insights. Since we don't have a lot of time left, so let's just focus on the Q&A for now, and then so I'll just go through the questions. I think some of the questions our panelists have already somewhat answered them, so I'll just focus on those that that I guess that were not covered in the discussions earlier. So the first question from the floor is that, does a good trader make for a good trading head or a boss? So I guess this question, I mean, who wants to take this question from our panelists? Martin, you want to start?
Actually, I don't know the answer to that.
I know you are a head of investments, right? So maybe you have some good insights here.
Yeah, I just actually started that position quite recently. So, I guess to try to answer the question, yes and no, I guess. Of course, if you're a trader, your main responsibility is really to make money. So if you can consistently do that and you do become the boss or the head of the team, you should be able to carry that forward. I mean, the ability to make money, you should be able to do that whether you're a trader or the head of trading. So I think in that regard, it's something that would definitely help. But with regard to managing the team, I think that's a bit more tricky. Coming from a trader position and then into a bit of a more managerial post, it doesn't necessarily mean that it will translate. So honestly, I guess it's something that's a work in progress, especially for me at this point.
Thanks for sharing that, Martin. So let's take the second question. So the second question is, aside from handling a fund from work, do you still have a personal portfolio to handle? If yes, do you have a separate strategy for it, or do you just mirror your trading strategy from how you handle your fund from work? Leonard, do you want to take this one?
Okay, sige. Baka matanggal ako sa trabaho eh. But, I guess in general, you try to lessen it depends. I don't think there's a right answer here. So for me, I try to take a longer position for my personal, because it's already very stressful handling company funds, and it will just double your emotions if you do the same thing. So not exactly the same, but there are similarities, but with a longer time frame. That's for me.
Right. And kind of to add to what Leonard said, I guess it's also very important to note that a lot of companies, they have very strict compliance rules, right? So when you're managing the portfolio of the company, you're expected to refrain from doing personal trading, since that might influence your decisions, or you might even front run your investors' money, right? So there's actually some companies may have that restriction, especially if you are, for example, trading the same type of assets. I think that might be more applicable to equities rather than usually it's more strict and it's the policy is stricter when it comes to equities. That's why a lot of companies have such a thing as like personal trading compliance, and if you have personal trades, you will have to report to compliance prior to execution of those personal trades to make sure that there's no conflict of interest when it comes to managing your portfolio. I mean, I had my own experience there, as my first job was in compliance, looking at the personal trades of investment professionals, and that's actually what motivated me to take this career path. The next question is, how can you measure that you are already successful in trading? Ivan, do you want to take this one?
There are, I guess, many measures to be. It depends. First, I guess, is if we're talking about professionally, then that is set in stone. You agree beforehand before you manage how you get measured. What's your success like, for example? Like for me, I have a benchmark, for example, right? I manage a portfolio and I have a benchmark where we can compare the performances. So that one pa lang, if I outperform that within a certain time, then I'm successful. Aside from that and making money on an absolute basis or losing less money than everyone else, I think related to what I was saying earlier, and I think it is a lesson also that I had to learn through losses, is that this trading game or investing game is a probabilistic game, right? You don't know what's going to happen. You don't even know what's going to happen in the next few minutes. How can you know in the next year or so, right? But having said that, I think what we need to do is to determine whether the decision, because this is a measure of success. For me, it is about making the right decisions despite the outcomes. So there are good and bad trades, and there are, right and wrong trades, right? So what I mean by that is sometimes when you make a bad decision, you still make money. Or when you make a good decision, you still lose money. I would rather take all the time good decisions despite losing money, because I know when I'm making the right decisions, I can consistently do my method. And if I'm wrong, I can refine that. I know what I'm doing wrong and what happened wrong. It's gonna be always my fault. Whatever I do, it's not the market's fault or anything. So yeah. So I think for me, as a measure, I'm already successful if I keep on making 100% the right decisions, despite whatever the outcome is. A bit philosophical, no? But yeah. But yeah, that's
Thanks.
one.
Right. Well, thank you very much for sharing that, Ivan. So I guess we don't have much time left, so I am sorry for those questions that we couldn't tackle right now. So that's the end of our panel discussion. I hope you guys enjoyed it, and I hope you learned a lot from our panelists here. So back to you guys.
Thank you, Mr. Ante, Mr. Chua, Mr. Santos, and Ms. Kasunuran. As our token of appreciation, we present to you these e-certificates.
Thank you.
CFA Society
Sorry.
Philippines presents the Certificate of Recognition to Mr. Ivan Ante, CFA, for his contribution as speaker with the type of Trader's Career Track at the Philippine Junior Finance and Investment Summit 2021. The future starts now. We'll just take a short picture, sir. Okay, next certificate, please. CFA Society Philippines presents the Certificate of Recognition to Mr. Leonard Chua, CFA, for his valuable contribution as speaker on the track of Trader's Career, Philippine Junior Finance and Investment Summit 2021. The future starts now, given this 10th day of November 2021.
Thank you.
You'll just for the next one, we have CFA Society Philippines present the Certificate of Recognition to Mr. Martin Santos, CFA, for his valuable contribution as speaker on the topic of Trader's Career Track at the Philippine Junior Finance and Investment Summit 2021. The future starts now, given this 10th day of November 2021.
Thank you.
Would also like to present this certificate of recognition to Ms. Starlyn See, CFA, for her valuable contribution as moderator on the topic of Traders Career Track at the Philippine Junior Finance and Investment Summit 2021, The Future Starts Now, given this 10th day of November 2021.
Thank you.
We'd just like to have a quick photo op, our sincerest appreciation for your time and the effort you've extended to be here today.
Okay, guys, smile. 1, 2, 3. One more. 1, 2, 3. Okay.
Thank you, everyone. God bless and keep safe.
Thank you.
Thank you.
We're going to have our 10-minute break. If you have not downloaded and installed the CFA Society Philippines mobile application, please do so now. For your questions, please see the prepared list of frequently asked questions available also in the app. If you want to post PJFIS 2021, the future starts now, do not forget to use hashtag PJFIS 2021, hashtag the future starts now, hashtag CFA Society Philippines, whether you are posting in Facebook, Instagram, or LinkedIn. As a reminder, the evaluation form is available in the CFA Society Philippines mobile application. We have an evaluation form for each day of the PJFIS 2021. This is part of the requirement for you to get the e-certificate, and you should attend at least 70% of the whole summit or at least 13 sessions to get the e-certificate. We would like to take this opportunity to thank our sponsors, event partners, and media partners. For Platinum, we have MSCI Philippines. For Gold, we have AP Securities Incorporated, COL Financial Group Incorporated. For Silver, we have Atram Trust Corporation, DBP Daiwa Capital Markets Philippines Incorporated, and Papa Securities Corporation. Our media partners are Business World Publishing Corporation and Business Mirror. Our event partners are Bureau of the Treasury, the Philippine Stock Exchange Incorporated, and Securities and Exchange Commission.
Why choose the CFA?
How has being a charterholder helped my career?
The confidence that it's given me in my own analytical ability.
Being a charterholder has broadened my perspective.
My understanding of the industry is much better than before.
You gain a broad understanding of a lot of different subjects.
And it's made me more confident in the work I do.
Instant credibility from my peers.
I can go to a different country. I will meet people who have the same qualification, who understand what I've done to achieve it.
It's a global program, so you can speak to someone who's a charterholder from India or from South Africa and they understand you.
It feels good to know that it's quite valuable for employers in the industry.
My belief that I can achieve anything.
So I think being a CFA charter holder helps me to communicate with my clients in a language they understand.
The CFA gave me a lot of information that I had not learned during my economics degree.
The amount of knowledge which you get is so diverse.
Something I didn't know when I started the program was how important the ethics portion was. I realize now that it really sets the standard in the industry in terms of practices.
I can speak the same language with hundreds of thousands of investment professionals.
A deep knowledge, understanding of the financial market.
It is wanting to know how all the pieces fit together.
Because it really does open a lot of doors within the financial industry.
I learned to be patient, focused, dedicated.
So when you get those letters after your name, it's a pretty good feeling.
Having the CFA on my name card gave me a huge advantage, especially as a woman, because when I walk into the room, he immediately knows you mean business.
It's not an easy process,
but nothing's impossible.
It was a lot of sacrifice, but it's worth it.
I felt that I did a very, very big achievement.
And made me feel proud.
I'm very, very, very proud.
I'm very proud of the achievement.
I'm very proud to be a CFA charter holder.
Let's build a better world for investing.
Let's lead in improving the quality and standards of the financial profession.
Keep your abreast of financial innovations here and abroad.
Be known for integrity and professional excellence.
Let's always put investors' needs above our own.
Push for financial literacy.
Provide service to the investors through the selection of the best managed funds of the year.
Let's build trust in our industry.
Advocate on behalf of industry issues.
Convince trust and asset management companies to adopt the Asset Managers Code and the Global Investment Performance Standards.
Let's put ethics at the heart of everything we do.
Talk about ethical decision making.
Encourage ethical behavior and be really passionate about it.
Create an environment where investors' interests can flow.
Markets function at their best and economies grow.
For the ultimate benefit of the Philippine society.
I am Chris Arceo.
Mark Yu.
Erwin Ocampo Avante.
Rob Brown.
Sandra Araulio Gonzalez.
Mark Ilaw.
Kate Burgos, and I am CFA Charter Holder.
We measure
up. Join us. Let's measure up.
Welcome back, everyone. We are now down to the last session of the day. To stay on top of their exposures, traders must always be in the loop on market developments and movements. In the next session titled Reading the Markets, Must-Watch Indicators, our next speaker, Ms. Corrie Purisima, CFA, will give an overview of the indicators that are monitored by traders to inform their risk-taking and management decisions. Ms. Purisima is the Treasurer and Head of Markets and Security Services for HSBC Philippines. She has oversight on the global market sales and trading desks, markets treasury, and security services businesses. Prior to her current role, she was head of debt capital markets for HSBC Philippines. During this time, their team was awarded as Best Debt House or Best Global Bond Advisor in the Philippines 10 times in the last 12 years. She has been with HSBC for 18 years and held several positions including Head of Global Banking, member of the Corporate Executive Committee, roles in global market sales and trading, and in credit risk management. Prior to HSBC, she worked in the corporate finance arm of SGV and Company, handling onshore and regional projects in Southeast Asia. A qualified certified public accountant and the CFA Charterholder, Ms. Purisima is HSBC's representative at the Bankers Association of the Philippines Open Market Committee and Capital Markets Development Committee. She is a member of PHINEX and Management Association of the Philippines and was a former member of the Board of Trustees for CFA Society Philippines. She graduated cum laude with a degree in Business Administration and Accountancy from University of the Philippines and recently completed the Advanced Management Program at Harvard Business School and Global Bankers Program at Foster School of Business, University of Washington. Let's give a virtual round of applause for Ms. Corrie Purisima, CFA.
Thanks so much, Gladys. Can you hear me well?
Yes, ma'am.
Okay, hi, good afternoon, everyone. I'm Corrie, and first of all, thank you to CFA Society Philippines for having me speak to you today in this session, and really to share some of my thoughts around reading the markets, must-watch indicators. Could I ask Gladys if someone could share my slides, please? Okay, there you go. So I have a few slides that I'll share with you. I'm trying to be a millennial now, so I actually used canva.com. So I really found it interesting and really interactive and easy to use. So I hope the millennials, well, actually you're not even millennials, but you're even younger than that. So I hope you can relate to that. Okay, there you go. There are my slides. So, well, again, thank you for having me. And before I start the session, I wanted to share some context of what I do as head of markets and security services in HSBC Philippines, and why this topic, which is must-watch indicators, is very close to heart, and why it's very relevant to what we do in the bank and with our clients. So, as Gladys mentioned, I have oversight of the treasury business in HSBC, which this includes our trading team, which does foreign exchange and government securities trading. We don't trade in equities, but really what impacts the equities market is pretty much the same as what impacts the foreign exchange and government securities market. I also have oversight over the sales team, which deals with corporate clients, like and institutional clients like banks and insurance companies, and why it's important to them. And is that, like, for example, corporate clients want to borrow in US dollars and their balance sheet is in pesos. They want to hedge their exposure because they want to convert this exposure from US dollars to pesos, or they have import requirements because they buy raw materials, like the oil companies, for example. They buy foreign exchange from the banks like HSBC, and sometimes they hedge it. Sometimes they just deal it on a spot basis. So that's what our sales teams does. And also balance sheet management is part of my oversight, and this is part of the liquidity management of the bank. And lastly, security services. So what's that? It's a big word, and honestly, when I was in college, I didn't really know what Treasury did back then. So, well, security services is when foreign investors actually buy in the Philippine stock market, for example, and they can't technically take the the securities with them offshore, but they have to custodize that with local banks and foreign banks in the Philippines like HSBC and other foreign banks here. So we deal with offshore clients who try to invest in the Philippine stock market. So we do watch all of these market indicators quite closely, because it's related to everything that we do in the bank and everything that when we talk to our clients. So just sharing some of those tidbits. I hope I didn't give too much of a mouthful for you all, and it was easy to digest. I hope to see some people from UP here. I can see some friends from UST, PUP. So welcome and thanks for joining today. Just moving on to the next slide. Really just summarizing when you look at market indicators, we live in a highly integrated world. And with the world so integrated now, and within the internet, with social media, it's so easy to get information now from Facebook or Bloomberg.com. At the same time, we need to be extra vigilant in distinguishing what is actually factual, and also in looking through the vast amount of information that we see on what is relevant for us and for our clients. So and there's so much. There's global information around Asia and here locally in the Philippines, and that's why when I talk about my key themes on what I'll mention to you today, it's really around looking at the information from a global context, and then Asia, including China, and us locally here in the Philippines. Could you please go to the next slide, please? So in terms of outline, I'll go through basically these broad themes around what right now, and obviously this can change, as sometimes the priorities about all of these bullet points that you see change every so often. So we look at global markets, what's happening across the world, economic indicators. So I think this is something very, very familiar for all of you with your economics classes or accounting classes. Commodities, for those that are driving, I'm sure you're watching your gas prices quite closely. Corporate activity and capital markets, really what's happening around, the companies like Ayala or the banks. What are they doing? Are they spending money? Are they raising money to invest in the Philippines? And of course, the last but not the least, political risk and other black swan events. So these are really around the key themes that we generally look at, but there's so much more. And again, as I mentioned, we need to be extra vigilant in distinguishing and filtering through all these information, because there's just so much. It can be quite overwhelming. At the same time, very exciting, because there's so much happening around the world, and you see how they all impact the rest of the world, including us here in the Philippines. Now, before I start, I wanted to run a very, very quick poll. So Gladys, if someone can please run the poll, so I can just quickly get a feel of what's on your mind. Okay, so if you can answer very quickly, which is more important for the economy? A is monetary policy, B, fiscal policy, both, and then the last is not sure. Okay, so we're seeing more answers around both right now. I don't know how many seconds we have left. We're seeing 73 out of 160 participants. Okay, seeing a bit more on the both. Some not sure, some saying monetary policy. Okay, I think we're waiting for a few more of the participants to vote. I think we have 99, 100. Okay, I think we can stop the poll now. So right now we see that around 67% are saying both, and let me write it down. Monetary policy is saying 19%, fiscal is around 10%, and not sure is around 6%. So I won't answer right now, but let me go through the presentation first, and maybe I'll run the poll again later, and let's see if you change your minds. Let me share the results. Okay. Maybe Gladys, if you can quickly share the results of the poll. Thanks for those that answered. Just so you see, and let's see later if you change your mind on your answers. Okay. Gladys, if you can quickly share? Can you see the results of the poll? Okay, maybe I can just read it.
Yes, ma'am.
So yeah, monetary policy 21% answered. Fiscal is 10% both, 63. So vast more than majority answered both, and then not sure is 5%. So thank you for your answers, and I'll ask again the poll later, closer to the end of my presentation. So next slide, please, Gladys. Okay, so the first item that I wanted to cover was really around global markets, and right now these are the top things that are pretty much on my mind. So of course, COVID is still pretty much very, very much present in the world. It started out as a health crisis, but now turning out to be a financial crisis. And we've seen all the central banks around the world take action around monetary policy and fiscal stimulus. So in the US, for example, they give so much money to the American people, depositing $600 to $1,000 in their accounts monthly. That's a fiscal stimulus, so that it allowed the US citizens to be able to keep spending money even if they lost their jobs, to be able to sustain the economic growth. Monetary policy, we've seen central banks around the world bring down interest rates. And it's everybody, and we saw that happen as well during the global financial crisis back in 2008, 2009, and again now that in COVID, now that COVID happened. So last year alone, we saw here in the Philippines, the central bank brought down the overnight rate from 4.5 to from 4% to 2%, so 200 basis points. So you can imagine if you held bonds from at the start of the COVID, when interest rates went up because of the panic from COVID, and it went down by over 200 basis points. You can imagine the gain that you must have recognized if you held onto your bond. So I mean, and that's why it's very, very important to us why we watch what the Fed, the EU, Bank of England, Bank of Japan, and other central banks are doing. Some of our neighboring countries are starting to increase interest rates, and that's because they're slowly recovering from COVID. Here in the Philippines, not yet. The central bank has continued to be quite supportive from a monetary policy. Of course, it's very important to also look at global interest rates and what's happening with economic data around the world. US GDP, our third quarter GDP has actually just been announced just yesterday, and we were up already 7% on a year for the third quarter compared to last year. So it shows that we're also recovering, and you see that even other governments are starting to print positive GDP numbers. So that's why it's quite important. I wanted to also share about Google mobility data. Maybe you can Google that later and see. I'm not sure if you're familiar with that, but it's an economic data that actually it's not an economic data, it's something we look at because it shows the mobility, the activity in the country. So I think like in the Philippines, from pre-COVID levels, we're actually lower by around 20% in terms of mobility. So that shows obviously when lockdown happened, it was very, very low. And the higher the mobility data is, it shows how much that recovery is going on, how much activity is happening in the economy. And with us in the Philippines, being a consumption-led economy, this is a very, very important indicator for us. The second item is around US versus Asian economic recovery. So US being the largest economy in the world will be a very, very, very key driver for the rest of the world as we recover. And Asia, for example, is trailing a bit behind. We've seen how Delta variant has sort of put some brakes on the recovery from COVID. But at the same time, with US leading the recovery, it will set a very, very good directional view on how the rest of the world will recover. I also wanted to mention around supply chain bottlenecks. This is pretty much in our minds as well, because trade volumes have actually increased during the pandemic because people have shifted from services to buying goods. I'm sure many of you during lockdown have ordered more online, and like Cathay Pacific's actually quite busy now transferring cargo. They've converted a lot of their passenger flights to cargo now because they're bringing in so many goods from China, Hong Kong, etc. So people have actually shifted to buying goods like computers, electronics, and this is starting to cause, it's already causing logistics bottlenecks. And with US retail sales actually higher, this also includes shortages in semiconductor supplies. So why is it important? Well, even Apple has actually reduced their forecast for their production for iPhones because of shortage in semiconductor chips. So why is it important? It's important because it shows that even if there's a lot of demand coming up, the actual recovery could be slowed down because of the supply the logistics bottlenecks, the ability to deliver these goods. So I think that's something we also do watch quite closely. And then the third item is around China. China is a very, very big economy in the world, and commodity prices as well. We look at because I don't know if many of you have heard about Evergrande. So there's this real estate company in China that started to default on their $300 billion outstanding loan, $300 billion outstanding loans, and they pretty much have not been able to pay. And it's important to note because China's property sector is actually 20% of their GDP. And you know that China is the fastest growing economy in the world, right? And actually they have 1/3 of the global steel demand. So its slowdown can actually impact the rest of the world. And it was interesting because the government seems to be allowing the sector to cool down a bit due to changing demographics. I'm sure you know about their one-child policy. But why that's relevant for us is actually the impact is on lower commodity prices, because if they slow down their demand, actually the impact on commodity prices might be downward impact, and the rest of the world that's supplying that could experience some slowdown as well. So hence why it's important is it will slow down the recovery of the those countries that are impacted by China. Philippines is not so much impacted, honestly, and for us it's more around watching how they impact the rest of the world. They're one of our biggest trade counterparties, but in terms of the impact of the real estate sector to the Philippines, not that much. But in terms of what happened with Evergrande at the height of that, when news started on, if you Google it, there's so many news about Evergrande. When all that started to break out, we saw actually like the foreign currency, the peso start to depreciate because people were concerned that there will be some form of contagion, no? That it would extend towards the Philippines, similar to when Lehman collapsed back in 2008 during the global financial crisis. So and really, just so these are the three key themes that we are watching out globally, and how these are impacting to us here in Asia, in China, and how it trickles down to the Philippines. So the next slide, next section that I wanted to cover was around economic indicators. So I think this is something very, very easy for all of you. In seeing where the schools you're coming from, and I'm sure the subjects that you're taking are covering economics. So I mean, just really taking off from Investopedia. So if you just Google what is an economic indicator, and this is really just economic data, usually macroeconomic, used by analysts and traders to interpret current or future investment possibilities. And these indicators help judge the overall health of the economy. This is data that's released by governments, sometimes by NGOs or non-government organizations. And these are global, regional, and local data that have a specific release schedule. So for example, CPI for the Philippines actually comes out the week after of the following month. So like the month of October, we actually just got the CPI data just end of last week, November 5. So there's a very schedule to that that traders and analysts follow quite closely, and people position their books based on, sometimes they make their positions not aggressive because they're not sure on what's going to happen. Sometimes they make bets So those are the different situations. And there are three kinds of economic indicators. So there's leading, lagging, and coincident indicators. Now, going to the next slide, I'll just discuss briefly what these are and what are common examples that we look at for these macroeconomic indicators. So the first one is leading. So an example is just the yield curve, current share prices, and these are used to predict the future movements of the economy, but it's not necessarily reflective of what's going to happen. It's just, I guess the advice that you'll see in many books is these need to be taken with a grain of salt. And data on these financial guideposts will move or change before the economy does. Now, you also have lagging indicators which are known after the fact, like CPI or Consumer Price Index, unemployment. So like this, for example, is something being watched by the US Federal Reserve very, very closely and determining when they will start increasing interest rates. So they are watching CPI and unemployment, and it will confirm a pattern already in progress or over time. And it's basically going to be it will show what the result of what their actions have been doing. But I guess the difficulty is it's a data from the past, right? So you need to be able to react quick to be able to steer the direction of the economy moving forward. Now, the last one is called coincident indicators. So these are analyzed and used as they occur. Key numbers that have, and these are key numbers that have a substantial impact on the overall economy. So the best example is actually GDP. And if you look at the formula of GDP, it's C plus I plus X minus M plus exports minus imports, right? So, you know, if just in including infrastructure investments as well. So these are just key data points that we watch very, very closely. And again, as I mentioned, GDP, for example, here in the Philippines just came out yesterday, and it shows that we're actually recovering faster than what we expected. We grew at 7.1% for the third quarter year on compared to third quarter last year. And it was better than expected. And how did the market react? Actually, dollar peso went down, peso appreciated to below 50 and traded at 49.92 just yesterday. So that's your macroeconomic indicators. Now, the next item, if we can go to the next slide, please, is really commodities. I wanted to highlight this because this is a very important theme that we're seeing, especially this year. Now, my question is to you, does it have an impact on inflation? Maybe yes, maybe no. And if you define inflation, inflation is the rate at which the general price level of goods and services rises. So does it mean that if commodities rise, inflation will also increase? Maybe I'll ask, maybe I should have run that as a survey later. Now, basically, inflation causes a drop power, and there are two kinds. Now, cost push inflation, which is from higher prices of raw materials or labor cost, and there's also demand pull inflation from an expanding economy or higher government spending. So actually, like in the US, inflation is being watched very, very closely. But actually, the key drivers that they are watching right now is actually whether it's coming from services, because people are starting to go out and they're starting to demand services. And actually, the price of labor is not as increases much faster than the price of goods, because there's just much less, it's harder to fill labor basically. So that's an example of a demand pull inflation. Now, what's an example of a cost push inflation in the Philippines? Earlier in the year, we had issues on food prices. And like pork, for example, I don't know if people are going to the grocery here, but maybe you can check your grocery bill or ask your parents or whoever does the grocery at home how much pork has increased since early this year. I do the grocery online and I can see that my grocery spending has increased. But what the government has done is that they've actually reduced the taxes on pork imports to try to manage inflation. So if you watch the news, that's what they've been trying to do. Back in 2018, we also had inflation issues at the time. That was because of rice, because the prices of rice went up, and the government reacted at that time by actually increasing interest rates. And interest rates also, they increased the overnight rate to reduce the liquidity in the system. And at the same time, government bonds also reacted by also increasing because people thought of it as reflective of higher interest rates, and hence they sold off their bond holdings, and that caused rates to even increase further. So I mean, that's what I wanted to touch about inflation very, very briefly. So the next slide actually just shows you how commodities have increased. No, global commodity prices are actually up 72% year on year, and month on month alone, 12% up as of October. And this is mainly due to higher energy and commodity prices. Oil also interestingly is now above 80 a barrel, $80 a barrel. In fact, today it's around 84. And if you Google, you can check out maybe around April last year at the height of COVID, when demand was suddenly so low, and because the world was at a standstill, it actually traded to negative 37 a barrel. It's important to watch this because as the economies open up around the world and now heading into the winter months in the northern hemispheres, oil prices will continue to be under pressure, and it's important to watch out for this because it can impact prices and interest rates correspondingly. So again, this is something we are watching quite closely. We look at gold, but not as much. Gold is important because it's also held by the central bank as part of their gross international reserve. So another data point to think about. But from a trading perspective, we do look at oil a bit more closely than the other commodities. Now, on to the next slides. Again, all of these we look at it from a global and Asia perspective in the Philippines. The next item is we look at corporate activity and the capital market space. Now, why is it important? You see a lot of the large conglomerates are, if you see them spending, they'll need, if you see them, I'm sure you've seen probably their analyst briefings. They always give out their capital expenditure plans, and this is always part of our client discussions. How much are you going to spend? And all that is public information because they talk about it publicly. And it's important because if the more they spend, the more money they'll need to raise, and the more money they'll need to spend into the country or maybe outside the Philippines. We watch that quite closely because it will show the economic activity in the market. It will show potential inflows of dollars if they're going to do, say, an IPO, for example. It also talks about, we also look at trade flows through imports and exports, because the more activity there is in the market, there's actually more foreign exchange going in and out of the country, and that's a driver of the flow for the market, and we look at that on a daily basis. We also look at the supply and demand dynamics of government securities. So, for example, just over last week, the Bureau of Treasury, Republic of the Philippines Treasurer Lea De Leon just announced that they'll be doing a retail treasury bond. So I don't know if many of you invest in that. That's open to retail investors. Maybe your parents invest. It's a 5,000 peso minimum investment. But why is it important to us as a bank, as a trader? This represents increase in supply, and with increase in supply means lower prices. It means potentially higher interest rates. But they are actually managing the market by what they've said publicly is that they won't be issuing a jumbo size. So in the past, they've issued over 500 billion pesos in government securities. So maybe now it will be a bit less than that. And it's important in driving the supply and demand dynamics to see how interest rates will be moving over the near term. They also raised US dollars, around 1.7 billion US dollars in the retail dollar bond market naman, also here in the Philippines. So it just shows that they have ability to raise funding, and they're not under pressure to raise a lot of money, and they're able to contain, because the fiscal situation of the country is in a very, very good place, and hence they're able to manage the supply and demand dynamics quite well. So hence this is something, banks are watching quite closely, because the more supply there is, then the more pressure there is for interest rates to go up. And that's interesting for us. Now, IPOs, debt issuances by corporates and financial institutions. So IPO, I wanted to highlight, for example, if you recall, Mondi Nissen raised, they did an IPO of around $1 billion US, one of the largest in the Philippines in history. And we saw so much of that flows coming in from offshore investors. And why is it important to the market? No, if the IPO of a company is going to be very, very well received, meaning a lot of investors will buy that from all over the world, foreign investors, it means that they need to put their dollars into the Philippines to be able to buy these IPO shares. And why it's important is if there's a big inflow of US dollars into the Philippines, it means that there's more pressure for the peso to appreciate and rather than depreciate. And similarly, if you see like a big outflow of investors getting out of, because they're trying to get out of, say, a risk position in the Philippines, that will materially impact the foreign exchange dynamics as well. So we do that's something very, very important, and we watch that quite closely. So for example, just today, a company called Synergy, which is the owner of National Grid. This is the transmission company for the Philippines that's basically the highway of our electricity. That's where all our electricity passes and delivers it to us, to our houses or to our homes. They just did an IPO today, although the volume I think was just around 200+ million US dollars. So not as big as what we saw with Mondi Nissen. And if you compare that to Mondi Nissen at that time, back in June, that it actually impacted the market by causing the peso to appreciate at that time. So traders sometimes position for that because they're aware that there's a flow coming. They know when the settlement date is, and that's why they do look out for that. And that's what I talk about here when I say, what's the impact on equities, foreign exchange, and government bond yields? So the last item is, last portion that I wanted to talk about is on political risk and other black swan events. Gladys, if you can, next slide, please. So, yeah, I mean, this is also known as geopolitical risk. I think, obviously, if there's a war that's going on outside, in the world, that's a major issue for us, and it will cause markets to be jittery. It will cause the markets to go flight to safety. And when you say flight to safety, they typically move from emerging markets into US treasuries, and then they move from emerging market currencies into the US dollar. And those are the market dynamics that we watch out for in case there are geopolitical issues. And obviously for us here in the Philippines, and then going to the Asia, even back in 2001, you're aware of, maybe you were too young for that, but there was 9/11, right, when the Twin Towers in New York was attacked, that caused very, very material market event. So that's a geopolitical risk. Maybe much more recently, looking at the US-China dynamics a bit more closely, if you look at the news, we'll see that there's a lot of issues on the West Philippine Sea, where we're starting to see more. I guess the Americans and the US are both trying to seek control over that. So actually, if you look at the map of the Philippines, you'll see that China, their access to water is actually quite small. So maybe if you can Google the map of China, and why that sea is very, very important is actually it's a very strategic access way, for China, for them to be able to take control. So if whoever takes control of that area would be able to block a key access way for in a time of war. So hopefully there's no war, knock on wood, everybody. But I was just sharing why it's a very, very important sea. Why Philippines and the West Philippine Sea is a very strategic position, why we are in a very strategic position now, and why that is something we are watching quite closely in terms of US and China tensions. Although with US President Biden, it seems that he's been a bit more open with discussions with China President Xi Jinping, and hence it's been a bit more, I guess, less tension on that front compared to what we saw with previous US President Trump at that time. So obviously with taking into consideration geopolitical risk, the risk on investment returns due to political changes or instability in a country can impact us and our investments materially. And so that's talking about China, US, but here much locally, much closer to home, we do have presidential elections coming up next year. And if and in the past it has been peaceful, and that's the hope and the wish for presidential elections next year. But if there's violence, knock on wood again, then that will cause some jitters in the financial markets as well. So these are we're affected by business factors and government decisions that impact the world, the region, and the country. I mean, related to this, we also look at government decisions leading to regulatory changes such as tax or land ownership. So, I mean, another example is you're aware that land ownership is limited to Filipinos, right? But if suddenly that is opened up to foreign investors, then we could actually see a big influx of investors here into the Philippines, which means dollars coming into the country. Now, other things such as black swan events. I mean, COVID is a black swan event. In a way, Taal volcano eruption was sort of a black swan event. That's more an environmental event. We do watch that quite closely. I mean, you've seen how COVID has impacted the rest of the world. Now, up to now, we've been on lockdown, and now we're getting out of it for over a year and a half now. So it's really interesting. Now the question is, can we be ready for that? How do you get ready for that? Maybe that's something I can leave with you to think about, and why that's important to us. We also look at other things such as cryptocurrency. In the banking system, it's not yet as embedded, I think. But these are interesting decision points for you to think about. Maybe something for you to look at. And of course, ESG or sustainability, with COP26 just concluding last week. It's interesting to see how the results of that could impact the capital markets and more fundraising to support sustainability. So again, things to watch out for. Bitcoin, just so you know, jumped in the past 68,000 for the first time to a new all-time high, and it's part of a wider recent rally in the cryptocurrency sector. So it's been the overall value has been taken to be around over $3 trillion, and Bitcoin hits its October record following the launch of its first Bitcoin-linked exchange traded funds for US investors. So again, I go back to monetary policy versus fiscal policy. I think just going back to that key theme now with COVID and what's happening around the world. In the US, we've seen monetary policy very, very strongly done and in place. They've also spent so much money. They're running on very, very high deficit to GDP numbers. Even our Asian neighbors like Singapore has expanded their balance sheet to 20% deficit to GDP ratio. Philippines has also done that. Pre-COVID, our deficit to GDP ratio was around 3% or so, and the forecast for next year is around 9%. Which means we're borrowing more money, we're spending more than how much we can collect, and as a country, in terms of cash collections from our taxes. But that's important now because we need to spend money to be able to kickstart the economy to recover. But at the same time, monetary policy is there to support the liquidity in the system, to keep the money flowing so that people have access to money. People have, the small entrepreneurs, the businesses have access to money to be able to pursue their growth objectives for their company. So, that was really it. So again, just going back to the last slide, these are really just, sorry, previous slide, please. So these are the factors, again, that we look at: global markets, economic indicators, commodities, corporate activity in capital markets, political risk, and other black swan events. And they go, side by side, up and down, left to right, right to left, middle to right, middle to left. They're all interchangeable, and we look at them at different times, sometimes more on commodities, depending on the theme, like earlier this year, but sometimes maybe next year when we have when it's closer to elections, we'll put a bit more focus on elections, and that's political risk. Obviously, black swan events, trying to be prepared for that as much as possible if it comes. And they're all interchangeable. They're all, very, very fluid and very fluid information that we look at from a trading perspective. We try to advise our clients around that. So I'll run the survey again one last time. Let's just see if answers have changed. Gladys, if you can just. So which is more important for the economy? Monetary, fiscal, both? Not sure. Okay. We have 47 participants voting. The last time I think we had around 100. Okay, so still pretty much both. Okay, so yeah. So now the both is a bit higher. The last time it was 67%. I'm seeing, wow, 74%. And I agree with you. I think that it's interesting that, monetary policy is a bit, I guess, faster to implement because, it takes just changes in the overnight rate, for example. Fiscal policy is a bit more, but definitely I agree with you. Both are very, very important in terms of, for the economy to recover. So seeing a slightly higher number now for both, no more unsure. So great to hear that. I'm glad that it was helpful for those that were unsure. Thank you very much. That's it. And yeah, happy to take questions if there's any. I hope that's helpful.
Thank you, Ms. Corrie. To moderate the Q&A part of this session, may we please call on Mr. Enrique Santos, CFA, Financing and Investment Senior Manager from Novel Capital Incorporated. The floor is yours, Mr. Santos.
Hi, good afternoon. Hi, Ms. Corrie. I believe there are already questions on the chat. Let's go through it, given the short time we have. For the first, for the first question, ma'am, coming from Ms. Monzen Malyari. Were there indicators that were important or market moving before but not as important now, or perhaps indicators that are only relevant during a special period?
Yes. So I mean, for example, macroeconomic indicators are always important, I think. I don't think they're less important. They were less important before compared to COVID. But I think like commodities, for example, it's more closely watched now because of just the impact of COVID and just how demand has swung very, very low and all of a sudden starting to go up, and how that will impact interest rates. So personally, that is something I'm watching a bit more closely now than I did pre-COVID. Political risk, not as much, but maybe closer to elections, we'll look at that as well. So you're right. I think some are some will have increasing themes at certain times. Now we're looking at vaccination rates also. The closer we get to herd immunity as a country, for example, would mean a faster economic recovery. And when we look at data for vaccination rates, US, for example, is already actually expected to be herd immunity, meaning they've reached 70-75% vaccination rate compared to, countries in in Asia that are lagging a bit behind on the vaccination. So to your point, yes, sometimes there are economic indicators that are watch a bit more closely at certain times, but the usual items such as CPI, GDP, I think are always important for us. Yeah.
Thank you, ma'am. I guess just a follow-up question on that, given that markets are very fluid. how do you decide which indicator to look at, or when do you ask, or when do you decide when to change or prioritize another market indicator?
I mean, because the macroeconomic indicators are pretty much the same, like GDP, CPI. Those are very big drivers for interest rates, which is something that we look at quite closely. So, I mean, like as I said, there's things that we always watch out for. But like now, given that interest rates and commodity prices are, I mentioned oil is increasing above 80 after such a long time. We're watching that a bit more closely, and we adjust. That's something we watch out for, because it will impact our position in our bank, right? If rates increase, what's the impact to our position, and we adjust our position accordingly. So we decide that. We look at it on a daily basis, maybe weekly. We have a weekly market update meeting within me and the team. Then we listen to economists a lot. So we do adjust that on a periodic basis. And as I mentioned, the themes sort of differ. I mean, for example, at the height when COVID started in March last year, people were just there was just so much volatility in dollar peso, for example. But then when things started to stabilize and there was much less economic activity, the peso actually appreciated so much, and that's because there's no movement, right? So we couldn't import. There's no supply, and logistics were a standstill. So actually, peso appreciated so much and was not so volatile. So I guess, like at that point, you'd sort of like, okay, let's not focus on that for now, but let's focus on moving. And at that time, what was moving so much was interest rates, bond prices, bond yields. So we would spend a bit more time focusing on that, because the positions that you have for bonds, for example, is harder to get out of rather than foreign exchange.
Thank you, ma'am. CFA is already asking me to ask the last question. I guess we'll just use the last question here in the chat. Last question is it wise to accumulate equities using leading indicators and then follow through depending on the lagging and coincident indicators?
I look at equities honestly as a long-term investment. I mean, I was listening to the earlier speaker a while ago. Personally, because as a bank, we're restricted from investing in equity, so I actually just personally invest in mutual funds. But I look at equities more as I look at both the lagging and coincident indicators, because so lagging, like if commodities are increasing, for example, or actually, sorry, I look at all, because if interest rates are increasing, you look at and you see how that will impact your position. But then if GDP, for example, GDP is increasing, it's actually good for equities in general, right? Like today, for example, yesterday when the GDP data came out. And if you look at lagging indicators as well, it will show you the direction of the interest rates. Like if CPI is suddenly going up so high, the impact of that is potentially higher interest rates, which means lower bond prices. But what's the impact of that on equities, right? And to me, I just look at equities as a long-term investment personally. So, but I do watch those honestly, and like when at the height of COVID, when things were just really all over the place, even in the recent months, we've seen equities go down. I took that as a view, and that's a leading indicator, right? Current prices. If you think that if they're at all-time lows, then it might be a good time to put in your investment in equities. And I think it's always hard to catch the bottom of the low, right? But when you think you're comfortable with that and just put aside your savings and something you can leave there, and then that maybe that's a good time. So to your point, I mean, on the question, yes, I look at all actually when I consider equities, but not as actively, honestly, because as a bank, I'm restricted from investing in equity. So I just look at it as a mutual fund.
Thank you, Miss Corrie. Gladys is already
Oh my God,
signaling.
thank you so much.
Yeah, thank you. Take over, Gladys.
Thank you, Ms. Purisima and Mr. Santos. As our token of appreciation, we present you these e-certificates. CFA Society Philippines presents the Certificate of Recognition to Ms. Corrie de la Cruz Purisima, CFA, for her valuable contribution as speaker on the topic of Reading the Markets, Must-Watch Indicators at the Philippine Junior Finance and Investment Summit 2021. The future starts now, given this 10th day of November 2021.
Thank you so much, Gladys. Thank you to the CFA Society. Thank you to everyone who listened and stayed on. Thank you for answering the post. I hope that was useful for you all. Thank you.
Thank you, ma'am. CFA Society Philippines present this Certificate of Recognition to Mr. Enrique Santos, CFA, for his valuable contribution as moderator on the topic of Reading the Markets, Must-Watch Indicators at the Philippine Junior Finance and Investment Summit 2021. The future starts now, given this 10th of November 2021.
Thank you very much. I'd love to ask more questions next time.
Thank you, Eric.
Thank you, Miss Corrie.
Let's just have a quick photo op. Again, our sincerest appreciation for your time and efforts for being here today.
Okay, guys. 1, 2, 3. Another one. 1, 2, 3. Okay. Okay.
Thank you. God bless and keep safe.
Thank you, everyone. Have a good afternoon.
Before we end the first day of PJFS 2021, we have some announcements for you. First, for our game earlier, the logo is MSCI. Congratulations to Xavier Cabungcal from St. Louis University. Please send us a message to our PJFS Facebook page for instructions on how to redeem your COL investment credits. Second, please go to the CFA Society Philippines mobile app to complete your survey for day 1. Kindly note that it is a requirement to get the e-certificate. Finally, we would like to take this opportunity to thank our sponsors and partners. Platinum, MSCI Philippines. Our gold sponsors, AP Securities Incorporated, COL Financial Group Incorporated. Our silver sponsors, Atram Trust Corporation, DPP Daiwa Capital Markets Philippines Incorporated, and Papa Securities Corporation. Our media partners, Business World Publishing Corporation and Business Mirror. Our event partners, Bureau of the Treasury, the Philippine Stock Exchange Incorporated, and Securities and Exchange Commission. See you tomorrow for day 2 of PJFIS. The future starts now. Thank you, guys. See you tomorrow.